If you are still trading breakout using lagging indicators or trading basic supply and demand or basic support and resistance, and then also chasing every single candle movement in the market, then you are basically trading into the hands of the smart money traders. Now, first of all, before we get into the main strategy, before I start breaking down every single thing you need to know about the strategy, let's talk about the most important thing, which is understanding who exactly are the smart money in the market. So when we make mention of smart money, we are referring to people like big financial institutions. This could be banks, hedge funds, and other top big trading firms out there that controls the market. Now, one thing a lot of traders don't know is that we all believe that the forex market is not controlled by anybody. But the truth is that this market is actually controlled by the smart monies, and these are the big men in the market. Why? Because they have the billions, the trillions that the market actually need to move. Your little $10,000, $1,000, $20,000, $50,000, $100,000 cannot make any major change in the market. These smart monies are the ones that actually makes the change. So if you want to be a profitable trader, the best thing you can do is simply make sure that what you try and tag along with them. Even if you can tag along with them just about 50 to 60% of the time, then you'll be a very profitable trader. So guys, before we get into the main tutorial, let me introduce you to one of the most reliable broker on the internet, known as lightfinance.org. So guys, Light Finance is one of the best trading platform out there when it comes to the brokers out there, and I personally use Light Finance to trade. Those of you in my Telegram community, you are already aware of this information already. I use Light Finance because they support MetaTrader 4 and 5, and even their own trading platform is 100% better than majority of the trading platforms out there. And I already made a video reviewing how their trading interface look, because their recent update made trading so easy, whereby you don't have to go outside looking for news or any single information. Every single thing you need to trade, every single market, including market analytics, are already integrated into their app. So if you're a trader out there, look for one of the best brokers to use, and this is the personal broker I personally use. So if you have any issue, I can actually help you resolve this issue as well. So you can actually sign up to them using the link that's available in this video description. Don't worry, in a bit we're actually going to get into the main chart where I'll be putting every single thing into practical, because I'll only do practical tutorials here. The first thing is, when it comes to trading smart money, you need to know some basic concepts that you need to have in your mind, because these are the things that actually govern the whole smart money industry. The first one is being able to understand market structure shifts. And the next thing is simply, you need to know things like supply and demand, order blocks, breaker blocks, liquidity grabs, and all of this stuff. Now, let me explain the first concept to you, which is known as liquidity. Now, liquidity is the fuel that the market actually needs to move. Just as we humans, before we can make any reasonable move or something, we need to either drink water or at least eat food before we can move. Now, the same way we need water and food to be able to give us energy to move, that same way the forex market actually needs liquidity to move. So in the forex market, liquidity basically means more cash. More cash, that's what it basically means. So when you hear the idea of liquidity, it basically means that what, more money. And you and I don't have the more money, only the big guys do. So now you might ask yourself, what exactly does this liquidity actually stay in the market? Now, this said liquidity can be at any part of the market. Now, it could be at a support or resistance level, it could be at a supply or demand level, it could be a fake fair value gap, it could be a fake order block. However, the most popular forms of liquidity are often found at areas of support or resistance, double tops or double bottom, or at times around trend lines as well. Now let's take a look at the typical one I have on my screen right now. I believe you can also see it. Now take a look at this market here. We all know that what, when trading trend lines, we are waiting for the market to come and test the trend line before we take our trade, right? Exactly. Now let's take a look at this situation here. You can see the market respected the trend line here, respected. But now take a look at this particular point here. You see this point here, before the market started respecting the trend line, the first thing it did was it first of all broke out of the trend line before it went back to the direction. Now I believe every single trader out there watching this video has probably experienced this thing before, whereby the market comes to the level, this could be a support level or a resistance level, and then it quickly breaks out of it before it goes to the original direction that you are expecting it to go. Now this process of breakout is what we term as the liquidity grab. So now the next concept you need to understand to be able to trade smart money concept profitably is basically understanding what exactly order blocks are. Now if you are someone who's been trading support and supply and demand, order blocks and supply and demand have no much difference. They are basically the same things. But for the sake of this video title, to fully focus on every single thing you need to know about smart money concept, I'm going to use the generic word that everybody uses known as order blocks. Now, for those of you who don't know, order blocks are basically levels whereby these big banks are looking forward to take trades. Now, how do you identify these levels? There are basically few things that you need to look at for this level. Now, for example, an order block would be the last bullish candle in a downtrend before a heavy momentum changed the market direction to the upside. Or it could be a heavy, or it could be the last bearish candle in an uptrend before the market made a massive move down to the opposite direction. So in simple terms, let me show you what exactly order blocks mean on the charts. Now let's take a look at this same trade again. Now take a look at it here. Now you see for this particular setup here on GBP JPY, if we are looking for order blocks, this place is actually our order block. Let me zoom in for you to see it clearly. You see, this is our order block here. You see this last gray candle here. You see this last gray candle here before this bullish momentum away from the level. This is your order block. And why is it your order block? Because this is the last bearish candle in the downtrend before the upward momentum came in. So basically, your order block is basically areas whereby there's a clean movement away and also printed a last opposite candle. Now in this situation, the market was a downtrend, and at this point, the market switched from downtrend to uptrend. And how did it switch? It printed the last bearish candle here, and then it gave us a heavy momentum away from it. You can see the momentum was unmatched. Now the market pushed back, and then another heavy momentum came through again. Now with this sort of momentum in the market, it's 100%, it's 90% clear. I won't say 100%, but it's 90% clear that whenever the trade comes here again, it's likely to trade upward. Why? Because this is where the big banks are looking forward to take this trade as well, because they printed this movement in the market. Your simple 10, 20, 50, 100, 10,000, 20,000, $100,000 cannot print this sort of movement in the market. You see these little candles you see here were moved by millions and billions of dollars before they were able to appear like this on your chart. So basically, whenever I see this sort of footprint in the market, know that what there is an order block around here, and the big guys are the ones that has printed this order block. Now the next concept here is simply market structure shift. Now what we mean by market structure shift is basically looking at where the market made a change of direction, maybe from downside to the upside or from the upside to the downside. What I mean here is simply the market changed from a downtrend to an uptrend, or from an uptrend to a downtrend. As a smart money trader, these are the only things you are interested in the market. You only want to trade the market when you are fully confident of the direction the market is actually going to. Because the smart money out there, they don't really care about all this trend line, all these indicators that we draw up and down. No. What they basically care about is simply where is the last market shift? Where is the last break of structure? Where is the last liquidity level? Where is the last heavy movement that we printed previously? These are the only things they look after in the market. So let me come over to the chart, and I use I had the setup here, I think, on card JPY. Okay, now here's what I basically mean. Now take a look at this market here. If you look at this market carefully, we all can see that what, judging it from this part here, the market was on a downtrend. You can see it clearly here. The market was a downtrend. However, this market trended downwards until it got to this point here. Until it got to this point here. When it got to this point, what did the market do? It decided to take out this level. Now taking out this level, this became what? From downtrend. Now from downtrend, the market was trying to make a shift to the upside, which is known as the market shift. So now, as a smart money trader, you are looking for only the point whereby the market is making the shift in the market. Now let me make it a bit more understandable for you so that you don't get confused. Now take a look. The market was a downtrend. It got here, then it switched to the upside, which gave an insight that what it wanted to be an uptrend. However, on its mission to be an uptrend, let's take a look at what the market did. The market traded upward, and then when it got to this particular point here where there was a previous level, you can see there was a previous level right here. When it got here, the market hit its limit, and they decided to start going downwards again. Now, why did I take a sell on this market in the first place? Now, here's why I took a sell. The first thing was simply because here was a market shift. You can see the market from here was going upward, When you got to this level here, then it started trading back downwards again. So at this point whereby the market took out this low here, it gave us an insight that what is about trading to the downside. So what this basically means is simply whenever the market takes out a low, you should know that what the market has switched direction to the downside, and whenever it takes out a high, it basically means that it's going to the upside. Now for example, in this situation here, you can see that this market took out this high here. So you can see this market took out this high here, and when it took out this high, it gave me the insight that what this market was planning to trade to the upside. But apparently the market couldn't do it. Why? Because it gave us this low here, and the market came back and they swept the low away. So since it was able to sweep the low away, it has given me the insight that what, okay, the old downtrend momentum in the market is still 100% valid. So for that reason, we are focusing on the downtrend part of it. So as a smart money trader, the things you are looking for is simply looking at for the areas whereby the market makes shift to a particular direction. Now, however, before you conclude on this direction the market makes shift to, make sure that what you have not just a market shift, but also a break of structure as well. Now, for those of you who are used to trading smart money from day one, market shift is the same as change of character. I call it market shift because that is a popular term I used when I was learning it to make it better, easier. Market shift. Okay, market has shifted. Market has shifted a particular side. So that was why I started using the word market shift, because it was more easier for me to comprehend when getting started. So at this point here, when the market took out this low, I knew that what the market has shifted to the downside. However, before you can be 100% sure that this market shift is valid, you need to wait for one more shift again, which is known as the break of structure. Now, what a break of structure simply means is simply, now for example, let me say there is a market moving in this manner. You can see the market moving in this manner. So let me draw this in a better place so I can give you a better view of it. Now let me say you had a market that was moving like this, coming to the downside. It goes, comes, goes, comes. Now you see in this situation, you can 100% be sure that what the market is a downtrend. Why? Because it gave you this low here, it took it out, and they gave you this low again and still took it out. Now in a situation whereby this market suddenly goes from this and then all of a sudden swept at this high here. Now taking out this high doesn't mean the market is now an uptrend. Why? Because the market can take out this high, but since it hasn't taken out the full level high over here, it basically means that what this market still have a probability of coming down. So in this situation, you don't conclude if the market is now an uptrend or a downtrend yet. What you wait for as a smart money trader is simply you wait for this market to push back down again and then take out this high. Now by the time the market takes out this first high, now this first high the market take out is known as the market shift. So this first high is known as the market shift. It has taken out this first lower high. Now the moment it take out that lower high, it created what? A higher high. Now the next movement in the market, you need to make sure that what it also sweep out this higher high as well. And in this situation, what did the market do? It has swept this higher high also away. So this other higher high is known as break of structure. Now once you have your market shift and your break of structure in line like this is when you could be sure that what the market has actually switched direction and is ready to trade the opposite way. That's why in this particular trade here, we can see clearly that what the market gave us a market shift here to the upside, but couldn't give a break of structure. So for that reason, I realized that what the uptrend was absolutely at power zero, meaning it won't be possible. So I had to wait till it gave us this market shift back to the downside, gave us this break of structure. Now I knew that what the market was set for a downtrend. So guys, when it comes to trading smart money, it's very important that what you understand what exactly this market structure means and this market structure shift actually means before you take any trade. If you are not able to mark them out correctly, come back to watch this video so you'll be able to understand. A market shift is only confirmed when it has printed a market shift alongside a break of structure. If there's no multiple breaks in same direction yet, you shouldn't be in a haste to take that position to that direction. As long as you haven't gotten multiple market shift to that particular direction, please stay away from taking that trade. Now let's put the whole strategy we've learned together when it comes to trading smart money concepts. Now when you look at the chart, the first thing you need to look for is simply where is your market shift. Now this is the most important thing. Now when you look at this chart like this, we can clearly see that what here we have the market shift to the downside, so you mark it as your market shift. Now I'm going to do two different setup. Now once you have your market shift, the next thing is simply you look for your break of structure as well. Now here becomes your break of structure. Now you've seen a market shift, you've seen a break of structure. Now you've confirmed that what, okay, I saw my market shift and my break of structure on the time frame that I'm trading to the downside. Now the next thing that comes into your mind is simply, so where exactly is my order block going to be in this situation? Now we look for your order block. Now remember the rule, your order block is the last bullish candle that was created in an uptrend before the bearish momentum came in, and vice versa. So if we should look at it carefully, we could see that what, here is a good order block. This place could be your order block. But then there is a problem with it. And the problem is that what, your order block is not supposed to be tested by the market. Meaning your order block should be a level that the market hasn't come into before. So for that reason, we look into the other term that order block actually gave to us to qualify it, which means there should be a decisive momentum away from it. Now, what do we mean by this momentum? Take a look at here. In this place, we have two order blocks. We have this one at the top here. However, you can see that this one, the market came just right here and they came back to retest it, which means that what, this order block is very weak and it's not valid. Now, the valid one here is simply this order block right here. So in this case, this order block becomes the valid order block. Now, why is it a valid one? Why? Because it gave us a momentum away and then the market never came back to retest it again. So in this situation, this one becomes our order block. Now, also confirm this as our order block. The next thing we'll look out for is simply, where then is our liquidity level? Now, we know that what, before this market will be able to move, the big guys need to sweep a lot of beginners like you out of the market before they actually start trading. So who are they going to sweep out? Who are they going to do it? Now, here is it. If you take a look at this chart carefully, you can see this area here. It's more like a resistant level that got broken. Now, you see, this place becomes your liquidity level. So this place is now known as your liquidity level. Why is it your liquidity level? Because the market came here, respected it, came down, came here, respected it, came down a little bit, came, respected it. Now, this gives a lot of beginners the mindset that, okay, next time the market comes here, this place is looking like a strong level so far. So the market is just going to test it and then sell off again. So what do these beginners do? They basically come on the chart and then mark it out and then probably put their entry here. They'll keep their stop loss above this wick here. And then their take profits, according to the rules, this low here. Now, once they do this setup, they simply sit back and they wait for the market to actually play into it. And once the smart money see so many others around these levels like this, all they do is simply they just smile. Why are they smiling? Because they know they are about to cook some set of people. Now the market comes and the market breaks it all away. Now once the market breaks it all away, you can see, then you wait for the market to actually mitigate your order block. Now here is your order block right here. Now you can see the market came really close to the order block at first, but it did not mitigate it. So me too, I did not see it. Since my alert did not get triggered, I did not see it as well, because I always keep my alert right on top of the level, exactly at the level, no negotiation. So you can see this one came close, but then it couldn't trigger the alert, so I didn't take it. So I had to wait until the market traded downwards and they came back to it again. Now when the market comes back to it, all you basically do is simply get in once you get a rejection. So when the market came to it, the market tested it and they gave me a rejection candle. Now what you simply do, if you are trading on a 15-minute time frame, you wait for a 15-minute candle rejection on your order block. Once the market comes to your order block and it gives you a 15-minute candle close and it rejected off the order block, you can basically go for it. And in this situation, I had it here. If I go down to the lower time frame, you see it. Now I had it here. Now once you set this like this, the next thing is simply, where are you putting your take profit? Now I always advise you set your take profit at 1:3. But before you can set your take profit, you need to understand where exactly your stop loss will be as well. And our stop loss can be at this top. And one thing I often do is simply, when I have two order blocks that really look so similar and very close like this, I use them as my stop loss position. So basically, I'm going to mark this particular one here, the wick of this one. Now I'll mark this wick and then I'll keep my stop loss some pips above this area. Why? Because since these two order blocks are very close, there's nothing smart money cannot do. Even though we are trading the smart money system, trying to track their footprints in the market, the honest truth is that what we still hit air sell. because this smart money also knows that you are following their footsteps. So at times they need to pull your leg a little bit before they give you what you want. So for that reason, when you have two levels closed like this, just mark the wick of the one above it as well, and keep your stop loss right above there. So in case of anything, you will be safe as well. Now next up is simply my take profit. My original target will be a 1:3, because once I get to 1:3 risk to reward, I'm okay. Now my original take profit will be here, and this one will be marked like this. So here is my original take profit. Let me mark it out. This area here, my original take profit. So that will be marked like this. Now after this, then I'm going to adjust it here. So once the market comes here, then I utilize my trade management techniques to continue managing it from here. So guys, this is basically all about smart money concept. There's nothing really complicated about it, unless you want to make it complicated for yourself. If you want to keep it basic and steady, this is basically all you need, and with this you are basically good to go. Now here's my advice for anybody who is coming to trade this same system that I just taught you right now. Now when it comes to trading this strategy, the honest truth is that what you are not going to get a lot of trade if you really want to get decent trade. If you want to get clean trade, that will give you at least 60 to 70% assurance that what is going to go your way. I will advise you to focus on maybe 2 to 3 setups every single week. Don't take too many trades, because if you want to take a lot of trade, you will end up not taking any position at all, or you might end up taking a lot of positions that will only end up in SL. So you definitely don't want this. So for that reason, I'm advising you to please make sure that what you don't over trade. Take all a few setups that are really clear. Like you saw the setup and you see that yes, this setup is really clear, it's really vivid, there's nothing hidden in this setup here, then you can take it. But once you see that there's something fishy about the setup, run for your life. So guys, this is all I have for you, and please don't forget to smash that subscribe button, like this video, and also make sure that what you use Light Finance, one of the best brokers out there. The link will be down in the video description. And also if you're looking for a prop firm to use, I use Blueberry Funded. I'm currently trading with them, and I've passed their account over and over again. I've made withdrawals from it that I did on this channel as well, where I did live withdrawals and everything. So guys, with this, so make sure you use my two promos, Light Finance and also Blueberry Funded, and we are good to go. So see you in my next video. Bye.